How's everybody doing today? Give me 1 second. All right. Let's see. Okay, now let's start. PK, welcome. I'm glad you were able to join. Thank you for your subscription. Yaroslav, good morning. Bill, everybody's getting tired of treading water. Mark, not going anywhere. And me too. Yeah, I'm tired of it too. So let's talk about that. Let's talk about that and see if there's any signs of the light at the end of the tunnel. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO in both companies, and today we're going to have a live trading room open to trade stock and options using our technologies. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. PK, I know you joined recently. Thank you. My background, again, technology. For those of you who are new, I was a CEO of several publicly traded companies. I've been trading my own money for over 15 years, mentoring and teaching subscribers how to trade stock and options, and finally I have a master's degree in computer science. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and statistics. Disclosures are very important, so please read them. You can always pause the screen if you need more time to read the disclosures. In terms of main concepts, again, let's go over them. All right, a lot of people are concerned or frustrated. I don't know what the right, word is, but the market is kind of trading in a very narrow range for the past, 6 weeks. So the idea is, again, it's all about process versus outcome, right? The idea that you do have to have a trading plan. Sometimes market always goes up, sometimes market always goes down, sometimes market just goes nowhere. And it's a lot of these things are beyond your control, right? We can try to predict it, we can try to time the market, right? But we learn with time that timing the market is very difficult, right? You could be correct that, you know, market is going to drop 20%, or you could be correct that the market is going to, you know, jump 20%. But timing that event, is this going to happen next week or, you know, 2 months from now? That's not a simple task. So what do? You have to have a process, right? You have a certain process. And I encourage you to journal all of your trades, right? If you're new to trading, I know some of you are new to subscription, you know, have very simple rules that you write down, right, in your journal. One rule is I propose not to have more than 4 positions, right? Market didn't go anywhere in the past 2 years, right? It was up 15%, down 15% in the past 2 years. In the past 6 months, it was up 10%, down 10%, right? So you can see that the market is trading sideways. In the past 6 weeks, I mean, it's traded 2% up, 2% down. So for that reason, I propose that you have both bullish and bearish positions, right? Maybe some positions like consumer staples or Eli Lilly, maybe they can outperform the market because there is a certain theme, right? Okay, fine. So you can have a couple bullish position, and then a couple bearish position. Looks like banks are, you know, under pressure. You know, small cap stocks are under pressure. So you have 2 bearish positions, right? And when market goes up, you decrease your bullish positions. When your market goes down, you decrease your bearish position, right? This is a famous, you know, long short equity funds, right? If you ever invested in these hedge funds, they have a lot of them are long short equity funds, right? It's a big slice of hedge funds industry, right? And there is a reason why professional traders do it this way, because in the traders market, you don't really care if the market goes up or goes down. You have both long, short, and then you can express your opinion, right? If you think right now market is overbought, okay, you have more bearish positions. If you think right now market is oversold, okay, you have more bullish positions. So process versus outcome versus very important, right? The economy of control. I encourage you to journal. I encourage you to keep all the trades and have a pre-market checklist. Before you enter a trade, always write down, determine position size, right? Position size is the most important, right? The goal is when you correct, you make more money than when you're not correct, right? It cannot be vice versa. The only way to achieve this, if you always do same position size, right? Always same position size, and you know, and you have these positive and negative visualizations. So in earnings power trader, right? If you're an earnings power trader, you can see, let's pause this for a second. Same thing in stock forecast, will show both. We have a lot of people from both subscriptions, so. Okay, so if you're an earnings power trader today, Target TJ Maxx announced earnings, TJX. Spiders, support 409, 410, overhead resistance 412, 413. Nothing has really changed, right? You can find the same information on Stock Forecast Toolbox, right? Right, these are predicted before the market opened, you know, posted last night. I agree with the model, right? Model is doing very good job when volatility is the same, right? VIX has been between 16 and, I don't know, 24, 23 for the past few months. So model has been trained on that data, in that volatility, and makes accurate predictions, more or less, right, in terms of range. So, you know, yesterday we closed at 410. 409, 410, that's market is overbought. Consider going long, right? 409, 410. Pre-market, we're up 0.5%. Consider going short, right? 413, 414 is your overhead resistance. Very narrow range, right? It's not a lot of, you know, this is for day trading, right? If you're day trading, this is your resistance number 1. Consider going short. This is your support number 1, and it's a you know, it's a buffer. It's not like a magic number, but anywhere here, market is overbought. Anywhere here, market is oversold. When we're in the middle, I mean, it's a flip of a coin. You know, usually traders don't trade when it's a flip of a coin. They want odds to be 70-30, right? Usually when you see these supports around these support resistance, it reverts to its mean. You have 70-30% odds that it will, so that's good. If you're not a day trader and you don't like to make quick decisions, then your resistance number 2 is it's 50-day moving average, right? So if you're thinking about days, weeks, I would choose S2R2. If you are thinking about hours, maybe 1 day, support number 1, support number 2, and right now we're at 412.30, right? So position size, right? You look at these support and resistance level. I don't care what you trade in. You probably, I think they said what? Literally, I think 6 stocks or 8 stocks are responsible for all the gains this year, right? So 485 stocks in S&P 500 are, flat, right? So they're all very highly correlated, right? So outside of NVIDIA, Google, and Tesla, and Microsoft, and Apple, stocks are very highly correlated, right? And even Apple and Tesla, if we break to support number 1 and you're an Apple, I would probably get out of this trade if you're doing day trading, right? If we break support number 2, I would probably get out of Apple as well, or Google, right? Because the only reason these support level holds are because of Google, Microsoft, and Apple, NVIDIA, and a couple more, maybe CRM. But that's about it. So size, right? So it's 829. If you're doing day trading, let's say at 412, you have an opinion that, what, Vlad, I don't agree. This level will be broken, right? Elon Musk had an interview. He said he's going to take over the world. Artificial intelligence is going to take over the world. Retail numbers are not as everybody feared. We're going to 417. Okay. What's your stop loss, right? If you're doing day trading, I propose support number 1, 409. So 1%, 412 to 1, 1% stop loss for 4 points. Okay, 4 points. How much money are you willing to risk? Day trading, you need to have $25,000. For day trading, I would propose less than 1%. So that's would be $250, right? $250 on the $25,000 account. Support number 2, average account that's not day trading, is $10,000. If you're not day trading, it's $10,000. I propose not more than 2.5%. So 2.5% would be also $250. Very easy for my calculations. All right. So if it's $10,000, $20,000, okay, it's $500. If it's $5,000, okay, it's $125. And those are your stop losses, right? So $250 for it. So then how many shares can I do? Okay, about 60 shares, right? If it's, if it's here, it'll be 412 to 404. Let's call it 10 points, right? This is 4 points. If it's 10 points, here it's 10 points risk, because I'm going to hold it for maybe a week, maybe 2. Then it's 25 shares, right? 25 times 10 is 250. That is the most important exercise. Nothing else matters, right? You could be right about this trade, you could be wrong with this trade, but if X2 is breaking down and you're bullish and you are risking less than $250, then you did well, right? Process, you're following your process, and then I would grade myself A or B. If you bought, 60 shares, the most common mistake is this one, right? You buy 60 shares, you think S1 will hold, market reverses, breaks through the low, and you say, well, fine, S1 doesn't hold, but S2 will hold for sure. And then at S2, you're down $500, then that's a mistake, right? It doesn't matter what Vlad said, whether he was bullish or bearish. You broke your rule, right? Only you have to be open-minded. Self-awareness is extremely important. In your journal, it's all between you and you, right? So you just write down that C or D, right? And the goal just to have A's and B's and not C's and D's. Some of the headlines are, where am I? So earnings power trader, right? Whether you're doing elite circle, right, with the TJX. This is yesterday. Kind of the same signal. TJX, right? So we have Baidu call and TJX, right? Doing earnings strategy. TJX, it wasn't bad. It wasn't great. Same thing with Target. Forward guidance was poor. You know, theft is a big deal. Some kind of crazy number, $500 million worth of theft. Maybe I misheard this, but it's a concern, right? It's a concern. Inventory is slowing down. You know, soft. You know, cautious consumer. Blah blah blah. Neutral reaction. Market is not impressed. It's not terrified, so it's flat. So let's try to close that trade. We do have earnings. I think starts at 10 a.m. on TJX. Target already had earnings. I mean, it may or may not move the needle, right? And you could, on forward-looking guidance, maybe TJX will say something bad. So I would try to close. So let's try with the put. Bid and ask is pretty wide. I'll try to close it for maybe 3 cents. The put. Okay, so I was able to close put for 3 cents. And TJX call, let's close it for 1 cent. Okay. People are a bit more concerned. So I'm out of TJX, right? Iron Condor. We're talking, Bill said he's frustrated. Bob is frustrated. I'm frustrated. Market is not going anywhere. A lot of people are very happy, right? A lot of people are doing market neutral strategies. The longer, the better, right? Because you're just collecting the premium, you're selling out of the money premium, and you're making money, right? Iron Condors on earnings, you get extra volatility, extra premium in options. The problem with a market neutral strategy, when everybody's doing them and VIX is low, you take in very little profit, but the risk is great. So you have to be very disciplined and make sure that you cut your stop losses very quickly as soon as you see a breakouts or VIX jumps, right? So that's TJX, right? Iron Condor, selling call spreads, selling put spreads. You can do the same thing on very popular spiders, right? Spiders, QQQ, 0 days till expiration. People do the same trades, but on QQQ or on spiders, which is okay. Baidu, let's close Baidu trade too. Didn't close it yesterday. It's down. I'll put it for 3 cents. Didn't get filled yesterday, so I'm gonna try to close Baidu, the leftover, the call. Right. So Iron Condor, selling premium, always looking at the maximum loss, maximum gain. If you're doing TJX, one contract, if you're doing one contract of Baidu, I propose you do 2 contracts of TJX. If you have only $10,000, right? The problem with Baidu, if it's usually you can overshoot by 2%, you're down $300, right? If it goes beyond the 2 times estimated move announced, right? 1 out of 10 times, the stock will go 2-3% outside of that range. We've seen that before, right? Like JP Morgan, for example. So then 2% would be around $300. So you may or may not. That's a little bit more for $10,000 account. Maybe you don't do Baidu, right? But TJX, one contract, 2%. Okay, it's $150. Good morning, Yaroslav. How are you? All right. So any questions on Iron Condor, selling premium, calculating risk? We're doing this at closing bell, right? Same trades in earnings power trader. We have AMET this week. We have Cisco, right? Walmart. So there's a few more companies that are announcing earnings this week. I don't know if this makes sense. I'm going to do the same thing in my account. Actually, earnings starts in TJX. So I'm going to get out of it a little bit earlier. Okay, Chris K on Discord, welcome. Let me know if you can hear me and see my screen. We have a lot more people. All right, let's see. Target. Okay, not having any questions. So Tesla is in the headlines, right? Interview with Elon Musk. I mean, I don't think it's a big event, right? On one hand, he said that we're potentially going to advertise, right? People were a little bit concerned about that, maybe softening demand. I think that's a theme across Target, TJX, Home Depot yesterday. Tesla, weaker consumer, right? If you look at the price action, right, it doesn't really matter what people are saying. What matters is the price action. Consumer discretionary, right? You know, it's very weak, right? Consumer is very weak. It's reflected in XLY, retail, XRT. Retail sitting at this key support level, right? Multi-month support level. So the state of the consumer is weak. We are in consumer-driven economy, right? So that's kind of a bear argument, right? And the bull argument, okay, great, but you know, Microsoft, Apple, Google, they're 50% of QQQ, and QQQ continues to go higher. I mean, it's a little bit overbought. It's at August high. I don't know what the next, you know, trigger is, but you know, there is no sign of weakness, at least as of right now, in technology names, right? But everything but technology is a little bit concerning, right? VTV, right? Continues 3 weeks and marginal lows. It looks like it's breaking down, right? And you know, we had like utilities yesterday, right? So there are some fresh signals where you see that, especially defense sector, right? Like utilities usually considered to be safety, healthcare safety. You can see there are definitely breakdowns on the weekly chart, and the elephant in the room is dollar, right? You know, the soft landing narrative is that dollar is weak. It's going to get weaker, right? And that's going to help S&P 500 companies that derive revenue outside of the United States. And that's soft landing, right? So that is one, you know, the chair has, you know, 4 legs, right? One of these 4 legs is weak dollar, right? And soft landing. The next one is low unemployment, right? No, you know, the third one is China reopening, right? So slowly some of these narratives are being questioned, right? Dollar does a big rebound in the past 2 weeks. Could that be a trigger? Maybe. Right? China, right? Wall Street Journal articles about, you know, empty buildings, and you know, manufacturing data is slowing down, and you know, unemployment among, you know, I don't know, what is it, 20 to 30 years old is rapidly rising in China. So there are signs of concern, and that's, you know, so some of these narratives are being questioned in the soft landing. What else was on the news? And office REITs, right? Office real estate, office REITs. New York, California, office REITs, rapid fire sale. This see office rapid fire office space rapid fire sale. Wall Street Journal was there. Yeah, so this was, you know, some of the headlines. April, same headlines in May, but the idea of this rapid fire sale in New Jersey, New York, you know, California, you know, San Francisco, you know, literally, you know, some of these buildings you buy for $300 million in 2019, and now you're selling them, you know, for $20 million, right? So just there are no buyers, right? And this idea of reopening and that people are going to go back to office, you know, being questioned, right? Maybe we'll never go back, you know, it will be a hybrid environment. So these are some of the headlines in the news. And then, you know, versus obviously, you know, artificial intelligence, right? AI, neural networks. Everybody talks about neural networks. You know, Yellow Tunnel talks about the models in neural networks. Google talks about this. Tesla talks about, and people are excited, right? People are very excited. I'm excited, and you know, Google is up. So those are two narratives in the market. You know, it's all about not what I think or what you think. It's all about yield, right? We are trading in this tight range, so yield is not going anywhere. Dollar is slowly, looks like build the bottom. I would say this is the bottom, probably for the next few months, probably till the end of the year, if I have to guess. So little room to the downside on the dollar, more room to the upside. In the March, we were February, first week of March, we were as high as 105. So I mean, that's probably your next overhead resistance. You know, and I mean, as long as we're trading in between 105 and 100, I don't think there'll be a lot of pressure to the downside or to the upside. All right, any questions? Fred, welcome. I'm doing well. Thank you for asking. Wow, coin landing on the side. We're going sideways, actually, 405. Straight traded receipt. Aaron Kander, good strategy. Thank you, John. PK, I do like options on spiders. You know, some people like options on SPX, right? There's no dividend, right? You have to be careful with spiders. If you're short in the money, you have to pay dividend, right? SPX is cash settled. You're not going to have. So some people prefer spiders, some people prefer the SPX. You know, but it's the same. The bottom line is the same thing. The difference is cash settled, not cash settled. Can you get, you know, do you owe dividends to somebody if you're short? That could be. Tesla is the pop. I sound fine. Thank you. All right. So that's that. Let's go through the positions and see. So QQQ is up 25 basis points. Well, let's see finally. Trying to catch a bid, so that's good. What else? Bitcoin, right? You see some kind of a early. Bitcoin is a good proxy for risk taking, right? How much, you know, irrational exuberance in the market. I mean, it's not a huge breakdown. It doesn't look like utilities, right? Utilities looks, you know, like a big short signal, right? Probably, you know, going to retest, you know, year-to-date low very shortly. Right, Bitcoin, but you know, it's marginal lows. It's since beginning of the March, right? So multi-months retest of the support. I would watch that level, and I would watch the level in the high yield, right? Not a huge breakdown, but kind of similar to Bitcoin. Another good proxy for risk taking. How much appetite for risk? You know, 1, 2, 3, 4, 5, 6, 7, 8. 8-week retest of the 8-week low, right? Retest of the 8-week low. We have to go back to March. So those are signs that we might get out of this range sooner or later, right? Everybody's frustrated. Vlad, you said it's going to be end of April, or then you said it's going to be middle of May. Time in the market is difficult, right? So how do you deal with it? Give yourself more time. Instead of trading June contracts or July, maybe it makes sense to trade September, October, right? Give yourself more time. Give yourself more room, right? If you're bearish, use wider, less contracts, maybe wider bid and asks spread differences. All right. Meanwhile, let's go over the positions and see if we want to make any adjustments. This is where you want to be patient, right? Because when you've been 6 weeks, it's not going anywhere. This is where you're going to start saying, okay, I'm tired of this. How long? Let's put on a couple more positions. This is where disciplined trader is very important. You don't want to break your rules. Just because you're bored, right? We have different, do not chase the trade, no hold trading. If you're hungry, if you're angry, if you're lonely, if you're tired, if you're bored, right? You don't want to be trading because of that. You don't want to trade just because market is not going anywhere, right? You want to stick to your rules. 4 positions, 2.5% maximum loss. Always the same position size, right? Not in terms of absolute value contracts, but in terms of percentages of your portfolio, right? Try not to call the top or a bottom. It looks like we're building the top, right? So it's hard to call the top, but we're definitely building the top, right? And look for signs of bottoming process, top building process, and your relationship with money, right? What is your relationship with money? How often do you look at the account value? Something you need to observe from the third point of view, right? Observe your behavior. And if you constantly checking your account balances, or you're using this money to pay off your college loan, well, that could be an issue, right? That could be an issue. All right. Positions, right? So let's go through. So on yellow tunnel, they're segregated, right? We have earnings power trader, we have aggressive power trader, right? Short-term trading, active trader. On Tradespoon side was different, stocks like CRM is an uptrend, CDHI, Micron. If you look at some of these trade ideas, you can definitely see, DHI is, a winner, right? Definitely a winner. CRM are definitely a winner. So model is doing what it's supposed to do, right? It finds the stocks that have potentially can outperform the market. These are short-term signals, right? So all the positions you can see in dynamic earnings and profit accelerator. On Tradespoon side, elite circle. All right, so some of the positions. We talked about Baidu, right? We talked about Baidu. So I'm out of Baidu trade. I think short call did it get filled? Did it not yet? Not yet. So I still have short call. Baidu is down today, right, with China, so it goes up and down. CMG, let's see, CMG. There are some stocks that can potentially diverge from the market, right? Everybody, strong consumer, right? Consumer, there's signs of weakness, right, in retail numbers yesterday, in Home Depot, Target, TJ Maxx, they're all kind of sign of weakness. But nonetheless, people are still traveling. They're buying burritos, right? They're buying Chanel bags. But they're buying iPhones. So the soft landing narrative is well and intact for sure. So as long as people eating burritos and they're not saving, restaurants like CMG, McDonald's, they're in a strong uptrend. For the past 3 weeks, it's not going anywhere, right? It's not going anywhere. So I'm cautiously optimistic, but again, I could be wrong, right? If we get out of this range to the down loss, right, 1900. So immediately my brain tries to calculate what's my position size. If I buy 1 share of CMG and it drops to 1900, I'm down. How much am I down? $135, right? Okay, so $135, maybe I want to buy another share, right? Buy another share. Because usually, that is flag patterns are very common in these type of earnings breakout, right? They they retest the breakout, right? And then they go higher, right? Especially if the market continues to trade sideways. So here I want to be down less than $250. So if it's I'm less than $250 down on $10,000 account, okay, I'm going to buy another share. If I'm down, more than $250, I'm going to sell, right? Trim. So it's a very important calculation, right? And this position size is very often going to be a difference between profitable and non-profitable trades, right? Because some people, if they bought, let's say, 5 shares and they're down, $1,000, right, on the $10,000 account, they're going to sell and going to say, Vlad, this was not a good trade. Why did you make me do this? And the other people that only bought 1 share are going to say, great, what an opportunity, buy, and then only see making money, right? So same trade signal, same setup, completely different outcomes. So it's all about position size, how many positions you have, and this maximum drawdown, right? Because if your portfolio is down, you're talking about, and you get frustrated. But if you get the position size correctly, number of positions correctly, then you can make a decision whether you want to buy or not. And so it is all about position size. I encourage you to always consider on a $10,000 account not to have more than 4 positions and maximum loss of 2.5% of account value, especially if you're new to trading or new to money management. NOC. This is one of those frustrating experiences. I've been trading around this position for a very long time, right? Aerospace and defense, very strong uptrend. I mean, it does look like, for those Elliott waves enthusiasts, right? It does look like wave 3, right? Wave 4, right? Right, and usually wave 5. I don't know. 70% of the time, whatever. Maybe, maybe not. A lot of it depends on Russia-Ukraine war. A lot of it depends on debt ceiling, right? Everybody talks about debt ceiling. Yesterday, the first time they actually agreed on the framework, who's going to negotiate, how they're going to negotiate. But, time is ticking, and it doesn't seem like they have. At least we have the framework in place, and I'm optimistic that, we can get it done by the weekend. Okay? I mean, I don't know much about politics, maybe yes, maybe no. So a lot of things are dependent, right? But it's sitting at the key support, right? Elliott, wave 5 does not have to happen, right? We can, maybe this was, I don't know what, but, maybe this, is just going to break down, right? Elevator up, elevator down. That also happens. So I do have a well-defined stop levels. Again, if you're down more than $250, this is the time you want to potentially trim, right? Because if you're already down $250 and it drops another 5%, then you're going to be down more than $250. If you're down, $125, okay, then it makes sense to think about it. So for now, I'm waiting. QQQ bearish, right? I think the last shoe to drop is technology, right? I don't know what the trigger is. It could be debt ceiling. It could be a rise in unemployment. It could be stronger dollar, right? Microsoft doesn't like strong dollar. Google doesn't like strong dollar. That's really bad for their earnings. So if dollar has a big pop, maybe that's the trigger. But for now, I'm bearish in June. I have a call spread in June, bearish. July, I have bearish call spread. And September, bearish put spread. So idea of option lettering, different strike prices, different expiration months, and risking no more than $100 per each of these trades, right? So you can do 1 contract, right? You do 1 contract on a $10,000 account. If you have less than 10,000, I mean 10,000, you probably don't want to do all these trades. I do have pretty large position in QQQ with these contracts. But that's one way to hedge against downside risk, and especially if you think that this is overbought and at some point, it's going to pull back. So that's QQQ. SH. If you're not comfortable hedging using short, options, again, out of these 4 positions, you can express your bias, right? If you think we're going to break to the upside because Tesla, Google, and Microsoft are going to take over the world with the help of artificial intelligence. Okay, right, then you buy SH. No, sorry, you buy bullish position, but you want to hedge, right? You want to hedge in case, they're not going to take over the world in the next couple of weeks. So then SH could be one of those short position, inverse of spiders. Silver could be another one. Silver, I said that I want to buy, but dollar is rising, and that's a headwind for silver, right? You do see that silver is breaking down. It is retesting the downtrend. I'm still bullish on the silver. I still think we're gonna post higher highs, higher lows. I think 20 level will hold, but I reduce my position and kind of watching the setup, right? So precious metals. The problem with precious metals, they rise usually when there's some kind of panic. This year there was a huge rally, right? They're at 52-week high, gold and silver, but there's no panic, right? So right now dollar is rising. It's a headwind for silver, unless we do have some kind of a panic. So I'm still bullish on silver, but for now I'm not adding. I'm just watching. We need to have some kind of signs of stabilization, right? And same thing with gold miners, right? And gold. So that's silver. Let's see. TAP. Similar setup to CMG. A little bit more. It's a little bit bigger pullback. It's sitting at this support, right? So same thing. If it reaches 61, right, this week or 60, you want to risk less than $250, right? You want to risk less than $250. Give me 1 second. All right. So same setup, right? At 60, you want to be down less than $250. Then you have a choice, right? You can buy if you think, consumer staples are not rolling over together with the market, right? And they're holding up. For now, they look like they are, right? Consumer staples, all the safety asset classes are kind of rolling over, making new lows, right? Whether it's XLP, XLU, or XLV, right? They are kind of rolling over. So TAP may or may not hold. But if at 60, based on the market conditions, maybe you think that artificial intelligence will take over the world, and staples will hold, right? Because you have to put your money somewhere. So then I would consider maybe buying, another half of your position. But if you're down more than $250, I would exit out the position, right? Because you do see signs that outside of these 6 names, everything else is kind of slowly rolling over. And let's see, 10-year yield, pulling back, TLT is flat. So dollar, right? So you can see as dollar is rising, it's going to put more pressure, definitely on value stocks, right? Definitely on value stocks. And I think technology will follow along shortly. All right. Any questions? Tesla, yeah, Tesla's working on humanoid robots. Tesla, Tesla's going to take over the world for sure. Not sure when, but eventually it will. Fred, thank you for kind words. Okay, Chris, absolutely indignant. Love the name. Thank you on the Discord. All right, it's 9:03. TJX, I'm out of TJX. TLT. Right, am I out of TJX? I am out. Right. By the moment, out. Okay, TLT. That's another elephant in the room, right? Was the idea that if we are in recession, TLT should rally. Similar to silver, we need some kind of jump in VIX, some kind of a level of panic, right? Right now there is no panic, but money market pays you 5%. It's treasury versus equity, right? Big debate on TV every single day. I think treasury market is right. I think TLT is going to continue going higher. Meanwhile, it did have like a marginal break, short-term low. Obviously, it has a risk to retest 100, right? The 30-year yield continues to rise, right? Overhead resistance is around 4%. So there could be some pressure, but again, as long as if you believe we are approaching recession, at some point Fed will lower interest rates. The question is why, right? I think it's because demand, right, is going to continue to slow down, and we're going to have some other, skeletons coming out of the closet. But if you're in soft landing, you might say, listen, Fed will pivot because inflation is going to be, continues to go down, right? And maybe. But in both cases, Fed is going to lower interest rates, right? The only way Fed is going to continue raising interest rates if inflation is going to start increasing, right? And right now there's no signs that inflation is increasing. Whether you look at the lumber prices, right? Home Depot said one of the reasons they missed their earnings is lumber prices down, and you can see across all the commodities, right? Whether it's copper or prices are going down, right? And services, I'm trying to rent my place in Florida. It's on the market longer. I have to lower the price. It's a trend across the, across the economy. So I'm long TLT. But again, it's the same thing. It doesn't matter what my opinion is, right? Let's say 30-year yield, we have CPI data, right? First 2 weeks of June, we're going to have CPI data. Let's say CPI spikes, 30-year, 10-year spikes up, and, TLT at, 99 or 100, right? 99. If I'm down more than $250, it doesn't really matter what my opinion is, right? Inflation can jump, right, significantly because unemployment is low. Everybody's traveling, buying, Gucci bags and burritos and McDonald's. Okay, so then if I'm down more than $250, I have to be out, irrelevant what my opinion on the market, right? A lot of people ask me, like, Vlad, should I hold or should I not? My first question is, well, how much are you down? If you're down beyond of what your, agreement, that level, some 2.5%, some 2%, you're out, right? It doesn't really matter because you don't know, right? But if you're down, 1%, 1.5%, maybe it's a good time to buy at 100. Right? Bill, word of the day. I'm going to start going back. Thank you, Bill. Remind me. Yes, emotional intelligence is important. I kind of never had a lot of participation or a lot of enthusiasm, but Bill wants word of the day. Yeah, let's do that. It's been a while. Let's find that wheel, right? So Bill likes it. So let's do that. Where is this? You guys can see this. No, I'm going to hide this. Word of the day is right. So self-awareness is extremely important, right? It starts, before market opens, it starts with, some kind of exercise, right? I do breathing exercise. I love these, for 15 minutes a day, I meditate and we do breathing exercises with a friend of mine. I love it. It makes my day. You have to find something that can, that lower your variable heart rate, right? There, a lot of professional, traders, they actually have monitors and they measure their variable heart rate, right? They measure their variable heart rate to make sure that they're calm and they're making calm decision, right? Breathing, right? Holding the air, building your carbon dioxide levels and lowering your variable heart rate. So whether it's meditation, praying, gratitude, whatever works for you. And labeling exercises. One word that describes how you feel, because that means you need to scan your body, you have to look within, and you have to identify one word that describes how you feel, right? So I'm going to put down, let me just think about it. Thankful. I'm going to put down thankful. So whatever one word that describes how you feel is very important because, based on that word and how you feel, it will affect your trading. There's no, there have been millions of experiments, and, this is just how this works. All right. So that's emotional intelligence and one word that describes how you feel. Any questions? Let's see, did I go over all the positions? TLT, and finally XLF. XLF. So regional banks are in the news today, right? I think Western Alliance, right? Western Alliance show increase in deposits. KRE is up 3%. How's PacWest doing? Bob's favorite stock. Up 6%. I mean, still a bearish price pattern. There's nothing, bullish or exciting about the setup, but nonetheless, today it's up 3% on this news that this week the deposits grew, which is a great sign for regional banks, right? At least some sign of stability, but still pretty bearish price pattern. That's still neutral, leaning to bearish. I'm still neutral, leaning to bearish. I'm leaning bearish a lot with my QQQ puts spreads in September. I purposely push them to September. In June, I have July. This is a sign of a concern for the bulls, right? The higher this dollar gonna rise, the more pressure it's gonna put on the market, right? And I think at this point, probably we're not gonna make new lows. This 50% retracement is gonna stay. And next level is 106, 105, 106. And the higher it rises, and we are May 17th, we have this debt ceiling that should shake things up. And then, everybody's going on summer break, right? Everybody's going to be on the beach, not trading. And any news, low volatility, low volume, right? Liquidity is going to dry out. That brings the risks to the market. John, thank you. Oh, John, fantastic tool. Which tool? The variable heart rate or the wheel, the emotional wheel? All right. Thank you for sharing, guys. Vulnerable. I should be doing this more often. Okay, we'll do the emotional intelligence more often. Thank you for sharing the wheel. Thank you, John. Oh, John is turning to the emotional intelligence. All right. I think Chad there. He had a good book to read. Ah, he's not there. But yeah, Coleman, right? He's kind of emotional intelligence is not, I mean, obviously, Romans philosophers talk about this 2,000 years ago, or however many years ago, almost 2,000 years. But at least the term, Daniel Goleman? Sorry, Goleman, not Coleman. Goleman. Emotional intelligence is something that's relatively recent, right? Maybe 20 years, maybe 30 years. So very important, right? And for the markets that are not continuing, in the past 10 years, you don't need to be emotionally intelligent, right? You just buy Google, you buy Tesla, and you're all set, right? And you can just sit on it for 15 years and, making money. But when they're trading sideways and they can drop 20%, they can go up 20%, well, then you need some kind of emotional intelligence, right, to help you guide you through the trading journey process. So consider reading some of the books on emotional intelligence, right? Who wrote Thinking Fast? Okay, so there's a couple of them, right? And this one also considered to be very famous in Thinking Fast and Slow. Kahneman. So, okay, so there are a couple of these guys. So that's a good book, right? Thinking Fast, Slow by Daniel Kahneman. Behavioral Psychology, Behavioral Economics, and Happiness Studies, Thinking Fast and Slow. So some of the books. This is a good book. I really like that. So Summary of Influence by Robert Cialdini. Very good book too. So some of the books on trading psychology. Well, this is not trading psychology, but emotional intelligence psychology in general. All right, it's 9:16. That's all I have for today. Covered all the trades. Today is Wednesday. We'll see. I'll do my research on earnings, right? I will do another earnings strategy. And for now, market is, semiconductors continue to rally, right? So that's impressive. Spiders are just uneventful, right? And QQQ uneventful, kind of sitting in a tight range. Your Bitcoins, your gold miners are down. China is down. Let's see, anything else interesting? Outside of China, being volatile. Consumer discretionary is up. Tesla is breaking out. Yeah, Tesla is up, but still kind of a pretty weak rebound. Nothing impressive. That's about it. And carry regional banks. All right. That's all I have for today. Thank you very much and have a great day. Bill, thank you. I will do it more often. Bob, thank you for sharing. Carol, I do, like I said, I don't want to overtrade, but in my, very famous strategy that I also do is when I see, this range, right, for short-term trading. Right now we're in the middle of the range. So, it's a flip of a coin. right? But here, consider selling, out of the money calls, right? Consider selling out of the money puts. We're at 409. It was very well defined stop levels, right? And just follow your trading plan, right? Again, not if you're down, I would day trading, on $25,000 account, I would not risk more than $100, right? So you can risk $100 if it breaks above this level on your short calls, and you're down $100, you're out, right? If it breaks this level on $100, then you're out. But you do these, a lot of people do basically 0 days till expiration, right? I do sometimes tomorrow, depends on market volatility. There's not a lot. You need to go out maybe 1 or 2 days because volatility is very low, but that's the strategy, right? These iron condors, whether you do it on earnings like TJX or you do it on spiders, it's the same strategy. Right now, I won't do it, but when we were here yesterday at 410, okay, that's the time to sell put, right? If we jump to 413, 414, okay, sell call. Ted, thank you, John Wheel. Okay. UUP is up. Yes. John has become a believer. Love it. Bob, Annie Duke, thank you. Yes, I think you will enjoy it. Please give me your feedback, but I really enjoyed her book. Appearance data supplement. Thank you, John. Which is my favorite, the book? I mean, I like Annie Duke book on thinking and bets. I do like Thinking Fast and Slow. Very popular book. I mean, this is like bestseller for many years. It's like if you care about any psychology, this is something you want to read. Do I think gold will rebound? Gold will rebound up, yes. And so does every other stock. The question is when, right? I think it will rebound because it's considered to be kind of a hedge against panic. When is the panic? I don't know. But definitely when there will be a panic, gold will rally, and you already see it's at all-time high. So people are already concerned about that, and they're buying. But meanwhile, there's no catalyst, right? And dollar is rising. Gold does not like strong dollar. So as dollar is going to continue rise, gold is going to continue to pull back. Will it revisit, October lows? I don't think so. Will it revisit this level, 167? Probably not. Can it revisit 176? Yes, if dollar is going to rise. So right now, I'm not adding to my silver position. I'm kind of patiently waiting and see what happens with the debt ceiling. It's the same thing. There's very little room to the upside in gold, right? Maybe we'll jump to 188, 192, but we could drop to 172. So risk versus reward doesn't make sense to buy gold right now. And if you're going to be down more than $250 at 172, I would consider, reduce your gold silver position. Right? It's sitting at the 50-day moving average. Usually that's a good support level. 180, 181 is a good support level, right? That's the breakout. But if you're down more than $250 and we reach 180, I would reduce this position, because if dollar is going to make another move up this week or next, most likely gold will drop by $2. Right? But eventually, I think it's just a matter of time to break through this overhead resistance. I just don't know when that trigger is. Right? It could be tomorrow. It could be next week. It could be, whatever. It's one of those black swan. We need some kind of a trigger. But for now, purely from risk versus reward, little room to the upside. Okay, maybe it's $6 to the upside. But if it breaks through 180, so for now, just wait. We need to see if this level will hold. Right, gold is sitting on the edge, right? It's multi-month support in gold, 50-day moving average, and dollar is rising. So one more push on the dollar, and gold will break through this level. So for that reason, I'm not adding to my position. Faust, thank you. Carol, thank you. John, I love you too. All right, by summer, I have a bull call spread. All right, guys. Scott is going to do closing bell. Watch for earnings power trader or elite circle, I will analyze the earnings, and if there is something that fits, I will do another iron condor. Thank you very much and have a great day.